And now, without further delay, let's get started with today's event. Sponsored by FIS and hosted by American Banker. I would now like to turn things over to your moderator, Michael Sisk.
Thanks very much, Erin, and I would like to welcome the audience once again. We are grateful that you've chosen to share some of your day with us. We know your time is valuable, and we'll honor that today with what I'm confident is going to be an enlightening 60 minutes or so of discussion. Once again, our topic today is revolutionizing digital payments through data analytics. And my name is Michael Sisk. I'll be your moderator today. I've been a New York-based journalist for about 15 years now, and I've had stints as investor editor at Red Herring, and as I've had contributing editor at American Banker. And I have my articles have appeared in several other publications, including Barron's. But more importantly, I would like to introduce both of the speakers to you now. The first is James Wester. James is Research Director for IDC Financial Insights, responsible for the worldwide payments practice. James' core research coverage includes the evolution of payment networks and financial technology, mobile and alternative payment methods, and legal and regulatory issues. Previously, James was founding editor of Mobile Payments Today, the first news site dedicated to mobile payments, commerce, and financial services. He also served as an affiliate analyst with Yankee Group covering mobile and emerging payments. Prior to launching Mobile Payments Today, James was Director of Corporate Communications for merchant acquirer James Payment Tech. He has an MS in IT Management from the University of Virginia McIntire School of Commerce and a BA in English from Drury University. And we're very happy to have James with us. And just a second, we're going to... Also with us today is Chris Burfield. He is Senior Vice President, Digital Market Strategy, FIS Digital Finance and Payment Solutions. Chris is a 20-year payments industry veteran, leads strategy, business development, and marketing initiatives for digital solutions at FIS. Chris joined FIS in 2012. Prior to FIS, he was responsible for retail, online, and mobile payments at Ally Bank in Charlotte, North Carolina. His broader experience includes product marketing, and finance roles at organizations including Metavante, eBank, and Fiserv. His experience spans retail payments, biller payments, electronic billing, and small business e-commerce. Chris lives in Charlotte, North Carolina with his wife Tina and two children, Thomas and Victoria. He earned an MBA from the Ohio State University and holds a degree in economics from Duke. And we're also very pleased to have Chris with us today. So before we jump into the real meat of the hour today, the program, I just wanted to reiterate a few housekeeping tips that Erin mentioned at the top. We do have time at the end for Q&A. You don't have to wait until the end to put your questions in. Please do so as they occur to you along the way, and we'll make every effort to get to those questions in the time we've got. If for some reason we do run out of time, we will follow up afterwards. So please, ask anything you'd like. Your voice will be heard, and we'll get to that. Also, we have a poll today. I always encourage 100% participation whenever possible. It's a nice way for everyone to sort of see where we all stand on the issue that we've come to discuss today. So please check that box if you can. And I think that with that, I'm done with my introductory spiel here, and I will turn things over to James. James, you have the floor.
Thank you so much, Mike. I appreciate the introduction. I'm happy to be here. As mentioned, I am the Research Director for the Worldwide Payment Strategies practice at IDC Financial Insights. Now, IDC is a research analysis and consulting company with more than 1,000 analysts worldwide looking at the technology market. On the Financial Insights team, we look at the financial technology space specifically from the perspective of banks and financial institutions. And as anyone who has been paying any attention can attest, it's a very, very hot space right now. Now, one part of, I think, what makes the area of financial technology so interesting, and payment specifically, is the confluence of some important core technologies that are all being discussed widely. Now, at IDC, we call these core technologies the third platform, and it's the newest technology delivery paradigm, and it sits on top of social, mobile, cloud, big data, and analytics. And like I said, these are all technologies that we're all discussing pretty widely at the moment, and especially in the context of how they're transforming businesses. And like all businesses and industries, our industry, financial technology, is in a period that is defined by an explosion of innovation and value creation on top of those technologies. Now, value creation is something I'll get into in a bit, but you can see how these four technologies are the foundation of some very exciting developments. Basically, all the cool things we're talking about these days, like cognitive systems and virtual reality and the Internet of Things, are all built on these core technologies. And at IDC, we call these cool things innovation accelerators because cool things isn't enough. So we call them innovation accelerators. And these accelerators will really extend that third platform capability and applications. And so along with mobility and cloud and big data and social, we believe things like cognitive systems and virtual reality and, say, the Internet of Things will affect all technology, even financial technology. And it will create an ecosystem of connected devices and connected homes and just connected things. And where that overlaps with payments and how it drives innovation in financial technology is that the ecosystem itself will be connected into the financial system. It will need to move money. So, for example, consider a connected car paying for tolls and gas, or your refrigerator handling its own refilling. You know, the possibilities are really amazing. Now, I realize that's sort of getting ahead of things, kind of into the realm of science fiction, and it's frankly kind of beyond the scope of what we can cover in a single webinar, but it certainly indicates why payments has become so very, very hot. Now, for today, I'd like to look at just one of those core technologies within the context of financial institutions, then within the context of planning for more near-term realities. And frankly, it's a technology concept that banks are still wrapping their heads around, and that's big data. But first, it's probably worthwhile to spend a little time on just what we mean when we discuss big data and analytics. And that's important as many vendors and analysts and such, including me, are beginning to use the terms interchangeably. And that's okay, since the convergence of those two topics is really inevitable. But understood properly, big data is a much bigger animal than what we normally think of as analytics, as we've done them in the past. You know, it's not just about slicing and dicing data. At IDC, we discuss the 4 V's of big data: volume, velocity, variety, and value. Now, volume in big data, pretty self-explanatory. It means data must be big. It means that the total volume of data at rest, meaning stored data, has to be at or above a certain number, usually measured in terabytes. That's a substantial amount of data, and given how much data is available from payments, that means that payments is a prime area for this big data discussion. We've been talking about how valuable the data from payments is for a very, very long time. Sometimes we call it rich data. And we're now actually to the point of realizing that value. And that data, of course, means not just how much is being paid, but to whom and where and when and how. Plus, it's data that can be collected to form either an aggregated data set to look at an entire market, or it's data that can form a better picture of an individual consumer. Regardless, every transaction has so much data attached to it that we can see where the topic of volume comes up very quickly in relation to payments. Velocity refers to the speed with which data is moved, and like volume, it too must be big, or maybe fast is a better word. This means that the data being sampled or captured needs to have a stream or change rate that is at or above certain gigabytes per second. Why that matters in payments and banking is that our discussions are moving towards real-time or near real-time data analysis. And that analysis leads to real-time or near real-time decisions, using information to make decisions as they happen. And what's more, the decisions are needing to be made all the time, everywhere. Now, variety in relation to analytics means data derived from multiple sources. So think of, say, buyer patterns or connecting financial transactions with geography for something like, fraud detection. If we think about all the ways that consumers can interact with banks, we can also include social media, for instance. So it's not just the rich transaction information, it's other data providing context. And it's sometimes context we're not even aware of, and I think that's an important concept when we're talking about data and analytics. And that's in relation to any industry. We don't have to be aware of the importance of a particular data set. The data itself, when analyzed, will show how important it is. And I should probably clarify on the first 3 V's that these characteristics of big data and how it becomes big data are not hard, fast rules. They're more guidelines for analysts. But it does provide sort of a good way to think about data. But you should also understand that it's possible for, say, a bank to monitor a large data source in real time but not store that data, or analyze large sets of multiple data types but not really do it in real time. That would still qualify as a big data deployment. Again, the qualities are important to analysts looking to define big data. But the 4th V is really, really important to the banks and the vendors who service them: value. Businesses have to obtain tangible benefits, and the investment is a waste of money. Now, that might sound self-evident, but in these early days of big data deployments, there can be a real disconnect between the investment and the realization of real value. And that doesn't have to be the case. I mean, even now we're just beginning to see big data deployments, but there are already use cases of banks that are beginning to work with and make use of the data at their disposal. This diagram shows how we can move from that volume, velocity, and variety to that port V. For instance, using transaction data or mobile app data and combine that with relationship data on the left through a data warehouse, looking at contextual data and posting real-time alerts for, say, fraudulent transactions. Those are real use cases banks are already beginning to play with. And there are many more applications of the data that banks have at hand, and we'll talk about that in a bit. But the main takeaway here is that big data and analytics are very powerful things. And I think that businesses worldwide are aware of how powerful this is, or at least becoming aware of it. The market for business analytics is growing substantially year over year, from $42 billion this year to nearly $60 billion in 2019. And this isn't just the financial vertical, but the financial services vertical does make up a substantial subset of this market. And to be clear, this is the market for what we call sort of traditional analytics, things like performance management or business intelligence. And those are the things that are at the heart of what goes into big data. Now, on the big data side, investments are ramping up even faster. And this is not just software. This is infrastructure and services as well, basically everything that kind of goes into a big data deployment. And as you can see, it's growing from nearly $17 billion to nearly $50 billion from the years 2015 to 2019. It is a steady 23% 5-year compound annual growth rate. That is absolutely huge. Now, again, needs to be explained, this is not one vertical, but the financial services market is a very large part of all of this investment. So how much impact are we actually seeing in the near term for analytics and big data? Well, this is a chart from IDC's most recent Futurescape for payments. Futurescape is what we call our predictions document. We just released it, and it's looking at the major trends going on in the market. Now, to explain what you're looking at on this chart, each numbered bubble represents prediction, and they're really in no particular order of importance. The size of the bubble, however, indicates the complexity and or the cost to address an issue. The bottom or x-axis is the time in months to mainstream, so those on the furthest left are items that organizations should really already be planning for over the next 12 months. And as you move to the right, we shift from 1 to 2 years and finally greater than 2 years on the furthest right. On the right side, on the left side or on the y-axis, we have the various organizational impacts. This ranges at the bottom to a single department or business unit, to the middle, which impacts multiple business units, and to the top, which is company-wide. Now, these are not absolutes, but rather each prediction is supporting up to a 36-month planning process by identifying the business impact and the complexity to address the predictions. So what does this have to do with our discussion? Well, what's interesting is that fully half of our predictions this year, especially those that trend towards very large-scale, company-wide transformations, have big data at their core. And to be honest, we probably could have even included a couple more, but these are just where the big data connection is very obvious. And the point is that big data is integral to just about every major technology trend in payments for the next round of IT planning cycles. And that's key. These are the things that will be happening to the banks and financial institutions, and they should already be planning for them. And big data and analytics is at the heart of them. These are market developments like faster settlement or payment platform transformation. This is not the science fiction sounding stuff I mentioned earlier. This is stuff that's going to be happening in the next 36 months. So what makes that statement more important is the context of the market we're observing right now. And this is where I'm talking about not a year from now, the market we are actually dealing with right this very moment. Now, as everyone listening to this webinar is fully aware, the market is not standing still. The payment market is incredibly active, and it is active in both positive and negative ways. All of the planning that banks must do is happening at a time literally everything is up in the air. So think about just a few of the issues facing consumers and their banks in the current market. So let's look at the consumer context. Consumers are, one, looking at the EMV liability shift, meaning brand new cards, a brand new way to affect payments at the point of sale. In the next 6 weeks, during the holiday season, consumers are going to be faced with longer lines and more frustration as they begin to relearn something that we assumed was basically hardwired into our brains, which is using a credit card. At the same time, consumers will understand that they have these new cards thanks to the pretty constant stream of news about their data being stolen. Now, we may know that EMV cards address only a certain type of fraud and that that's not necessarily connected. And we can argue with consumers until we're blue in the face about how these things work. But to consumers, it's just one more piece of information about payments and cards and their financial services providers. Now, on top of that, consumers are seeing brand new channels and payment methods from non-traditional players like technology and mobile handset providers who shall remain nameless, but who are also trusted by consumers. And in most cases, even though those new methods ride traditional rails, they still threaten to disintermediate the consumer relationship that banks have always had. Now, again, it's one more piece of information that consumers are getting that informs their bigger picture about how they can pay for things in the companies that provide those services. So that's the consumer context. Now, banks are dealing with their own context. All of those things on the consumer side of the equation are affecting banks' ability to delight their customers, to keep them satisfied. The changing preferences of consumers for payments and financial services is unbelievable in many ways. The demand of consumers to have constant access to their accounts through multiple devices, not just at the bank or through an ATM, but through mobile and tablet, any number of devices, is amazing, and it is absolute. Plus, there is now a push not only for on-demand access, but on-demand access to payment and settlement mechanisms. Consumers are aware of things like how long it takes to settle a payment, and they're wanting access to faster payment, both to pay their bills as well as to be paid. And that's leading to things like not just proposing additional settlement windows or the likely development of real-time settlement networks in the very near future, all of which banks will have to adjust for and connect to. And then again, all of this is happening while the FIs themselves are trying to figure out how to update their legacy payment systems to next-gen platforms. So lots going on in the market, and again, this is all right now informing the decisions that have to be made in the future. And of course, this transformation is coming at a pretty hefty cost. This is a forecast for the cost of what we're calling payment transformation. Now, this is just software costs FIs are paying to upgrade payments. It does not include services, hardware, or internal spend. And it goes from about $185 million to $238 million in 2019 worldwide. What's more, these costs are not additive. So this is individual spend for projects each year. And they also don't include any of the costs to keep current systems running while the business upgrades. These are incremental costs to already what's being spent to make payments happen. And so what do the FIs get for all the money being spent? Well, this. And this is a very simplified version of a modern consolidated payment platform or payment hub. And it shows just the very basics of what it does and how it sits in the middle of payment operations. Instead of, say, traditional way banks handle payments where lines of business manage payments in their own silo, a payment hub can connect multiple lines of business as well as multiple channels, such as branch, ATM, and online. For those channels and lines of businesses, it does all of that payment work. It handles receiving the payment, managing exceptions, approval, etc. And then it routes the payments to whichever settlement network is appropriate. All the while, it exposes that payment data that we've been talking about to internal stakeholders who need to access it for monitoring and reporting. Again, this is simplified, but it does, I think, provide a few very important concepts. First, the hub reuses common processes across multiple payment types, and that's to realize those operational efficiencies. So it's cost savings for the bank, but as I'll talk about here in a little bit, that's only a part of the story. Second, the hub connects multiple channels and lines of businesses to multiple settlement options, routing those payments according to whatever requirements are in place. That means the potential for real time whenever that happens. It also means a great deal of flexibility in the way payments are managed and how they can be used. And finally, all of this is managed by sophisticated analytics. And that provides the foundation for how the platform works. It's those analytics that are really doing all of the intelligent routing, that are taking care of a lot of the nuts and bolts. But it's the data across multiple channels and businesses, all interconnected, that makes it valuable and very powerful. So what we see then for banks and from all of the investment and transformation is not just operational efficiency, but also the ability to look at their data for multiple payment types and begin to use it to build products. It's not just cost savings, but we're now beginning to look at revenue generation. As I discussed earlier, data has value at both the aggregated as well as the individual level. So said another way, all the data for multiple payments can be turned into products that look at and better understand an entire market. Or that data, especially that data from multiple channels or sources, can provide insight into an individual member of that market, that consumer. And it can also help inform that relationship the bank has with that consumer. So let's look at some of the potential for that aggregated data that we're beginning to see. First, there's the ability to create risk models based on aggregated payment data, looking at fraud and bad debt, and making determinations of risk across an entire market. Now, we all know that risk in payments is an important consideration in pricing. Now, better risk models mean more responsive, dynamic pricing models. So it offers a flexibility that really hasn't been possible before. Second, we can look at the flow of revenue or products and like to assist with things like logistics and fulfillment. So imagine being able to see and anticipate customer product needs. Now, that's whether it's the bank's own products or those of its corporate customers. Either way, that visibility could be very, very valuable. And that visibility is due to the large data stores a bank now has access to. And once those models and pricing and fulfillment are in the market data provides feedback on the products themselves. So we can look at things like pricing and demand, helping to determine the responses to cost and pricing that have been put on the market, maybe even in real time. So that's part of really what makes the products built on analytics and big data so compelling. The products tweak themselves, which is a very cool idea. Now, at the same time that we have that aggregated data, we also have customer level data. And when you look at that, especially across all these multiple channels and across multiple product lines, banks now have the ability to provide marketing and upsell opportunities for next best offers. Again, that could be a bank offering additional products and services to its own customers, or how valuable would purchase data be to a bank's merchant customers? It's more powerful loyalty and rewards. And that, of course, drives that increased stickiness that everybody wants from their consumers. There are also more refined fraud and security tools from purchase data that can be used to proactively protect consumers. That not only protects the banks from losses, because we know that the customer is largely protected from fraud, but remember our earlier discussion about data breaches. Everyone benefits from increased trust in the system, and these better fraud and security tools built on data help do that. And then there's the idea not only of protecting customers, but providing, say, credit issuance instantly based on purchase and payment history. Again, that's a benefit to the consumer, also a benefit to the bank underwriting that credit, as well as any merchant customer who might sell more products. And if you really want to go full circle, it might even be more products recommended by that next best offer messaging in the first bullet point. So to be clear, these are only a few of the use cases for modern payment platforms that use analytics and big data. I didn't even begin to look at other payment types beyond consumer retail banking for this, because it becomes very, very clear when you start looking at those things just how powerful and amazing this data gets when it's all connected and when it touches every line of business. And there are just so many opportunities. So when you consider that, you see that big data and analytics are, again, an incredible tool. But whenever you see an incredible tool like that, as an analyst, of course, I have to give my essential guidance. I can't not. That's what analysts do. So to begin using data and analytics, IDC has a few pieces of what we call our essential guidance. And first, begin the process now if you haven't done so already. As I said at the beginning, this is a topic banks are beginning to grapple with. So many FIs are still in the earliest stages, but this is a time to evaluate big data and analytics strategies. In this transformational time for payments and banking, data and analytics will differentiate financial services and financial institutions. Now, that's not just a nod to the quote-unquote disruptors that we hear so much about. Other banks, credit unions, and financial institutions who use their data more effectively and more productively will be more competitive in the long run. And more competitive in this market may actually mean survival. Be clear, these are only a few use cases for modern payment platforms using analytics and big data. It's the recommendation then that you begin making sure that you have begun to look at these cases and begin to put them into your planning cycle. Second, build business cases to support the strategy. Understand the use cases and products and understand how they connect back to that fourth V, value. Build the justifications for investment. As mentioned, payment transformation comes with a price tag. For those financial institutions that are only looking at operational efficiencies, they're missing part of the story. They need to look at the revenue opportunities along with the cost savings. And finally, find partners who understand analytics and how to help look for those revenue opportunities. May sound like obvious advice, but a wide solution set that addresses the ability to build out those revenue opportunities is crucial. And yet there are a lot of vendors who may not have, or at least don't have, capabilities that are peculiar to the payments and financial services market. And with that, I'd like to say thank you again, and I'm going to turn this over to Mike. And Mike, I believe that we actually now have a poll question.
We do indeed. We do indeed. Thank you very much, James. And thank you for that overview and those insights. And we will now have our first and only poll of the afternoon. So what I'll do here is read through the question and the answers. And hopefully by that point, everyone will have had enough time to make their selection. So how would you characterize your institution's current level of maturity in payment analytics? Would you characterize it as exceptional, strong, moderate, or developing? And once again, the question here is, how would you characterize your institution's current level of maturity in payment analytics? Give everyone just another moment or two to make their selection, and then I'll turn things over to Chris, and he will take it away. We'll be off to the races for the rest of the program. Okay, that's probably enough time. Excellent. Okay, so pretty clear. We got a little over half of respondents say the payment analytics is developing, and another 25% that it's moderate. So clearly that's where the emphasis is here among our group today. So thank you so much for making those selections, and let me turn things over to Chris.
Hey, thanks so much, Mike. Yeah, it's interesting as I look at the results of the poll. I think this kind of closely aligns to what we would expect. And as James has walked through the vision and the opportunity that big data and analytics represent, the reality is it's just really hard to do this. And so that's as we kind of contemplated today's presentation, what we wanted to do is tee up the kind of the big opportunity, the strategic vision, and then what I want to do is really kind of turn our attention to the practical application, and let's look at exactly some specific examples of how analytics is influencing product functionality, is influencing capabilities that we can bring to the marketplace, and how it's driving evolution in payments. So that's really how we're going to move forward with the rest of the discussion. So from the standpoint of focus today, I'm really going to be zoning in on digital payments. And for a little bit of context, from FIS's perspective, we consider digital payments really those payments originated in the digital channels, and we focus those on kind of three broad product areas. One would be bill payment, one would be P2P, and one would be A2A or account to account. And the way that we've built our platform, we really have a singular platform that represents all those product capabilities. But bringing them together in a single instance for the institutions to utilize. Now, it's really digital payments has been very much an innovation area, a focus for FIS. Really, the key point of innovation has been around real time, and so we've recently launched our third generation P2P service. It's People Pay, and it facilitates real time end-to-end transactions as part of the capability. Same thing with external transfers. One of the things that we consistently see as a frustration point for consumers is when money gets lost. They don't know where it is, it doesn't show up in their account, and it may be kind of in the system for a couple of days. So we really tried to address some of those concerns and deliver on the promise of real time through these applications. So it's an exciting area for us. But perhaps the bigger reason that I want to zoom in on digital payments today is because of the context around the evolution of its usage and its relevance to the institution and the consumer. So what I'm sharing with you right now is a single slide out of some research that we've done recently, and The research really, this question was, from a consumer's perspective, what is the most frequently used application, both from a tablet or a mobile phone? And what you'll see from the results is that financial applications are the number 2 app from the standpoint of frequency of use. And again, this is self-reported data from our survey from our consumers. But really, these financial apps today trail only social media apps in terms of frequency of usage. And that puts them ahead of retail, ahead of sports, loyalty, even ahead of music, right? So that gives you some idea of how important these services are to consumers. And a lot of what's driving that relevance for a consumer perspective is the payment capabilities, right? Being able to originate payments through the mobile device is an expectation. And it's also an area where there's competition from non-traditional financial providers. So the reason that I'm going to zoom in on digital payments today is just its relevance, its importance, and some of the practical advances that we've made in the solution set. Okay, so I want to talk about really 3 broad areas that are kind of influencing the application of analytics in the digital payment arena. The areas that I'm going to zoom in on are, first off, risk. Secondly, I want to talk about driving compelling consumer experiences or driving delight. And then finally, how we drive value out of payment analytics. And that's really going to focus on offering intelligent offers to consumers, really driving wallet share and product cross-sell. So those are the 3 areas that I'm going to talk about. And I really kind of characterize these as kind of a synergistic trio. And why I say that is they really benefit both the consumer, or the user, the end user of the service, as well as the institution. Reducing risk, obviously a key aspect. Obviously, driving delight drives consumer value, but it also increases usage levels and adoption levels. And obviously, the value, providing compelling services to consumers, that's what they're at the bank for. But also, enriching and expanding that the wallet share and the value of the relationship is really the promise that we hold here. So I'm going to zoom into each of these areas and just provide some quick examples, practically of how we see analytics being applied in these space. So first off, I'll turn my attention to risk, and so the reality is, and as James mentioned earlier, the challenge with risk and fraud right now, or the opportunity, is that it's in the limelight. It's in the forefront of the consumer mindset. And that's a result of the frequency and the breadth of the data breaches that we all too commonly see on the headlines. So that's really driving a lot of kind of consumer focus around here. Now, this is another area that, from an FIS perspective, we've made consistent investments, and those investments have been both organic. We've also done some acquisitions to really drive best-of-breed capabilities in the fraud analytics space. Now, the key things I think that are interesting here in terms of changes from the standpoint of risk management, one is the shift in the growth of mobile, and then the other is what I mentioned earlier with respect to the shift toward real time. And both of those have an influence on the analytics. They also have an influence on how the product design corresponds and utilizes those. So from the standpoint of the data that's now expanding, it's really being driven by the adoption of mobile and other devices. So we see ourselves shifting and expanding the data set that's being analyzed to assess the relative riskiness of a transaction from things like the device ID of the device that was originated to send the transactions to one where there's a much richer data set. So, for instance, geo information from mobile devices is now incorporated in that assessment. We also, especially as we look at P2P, we look at not only sender information but recipient information. Right? You have a different view of how how the origination information and the receiving information compares, and that can influence the relative risk assessment of any given transaction. And then finally, we also look at how a transaction was authenticated, and increasingly moving toward the availability of biometric. So those are things that will start to be incorporated in the assessment. Now, as the richness of data that we use to assess those transactions and score those transactions expands, the other thing that's going on is there's a shortened time frame to react to the results of those assessments. And so as we've launched real-time services to market, we've also had to surround these analytics with payment capabilities to be able to harvest the results of the insights. So, for example, we've rolled out a payment suspend capability, right? That was never really needed in the past because we had latency associated with ACH transaction delivery that afforded us the ability to act on the insights of the fraud system. But in today's environment, moving money real time, that drives a higher interest, a higher attractiveness from a fraudster perspective, and so we have to incorporate things that provide that latency and provide the ability to not create a disruptive experience for the consumer, but to still give the institution an opportunity to evaluate the transaction. So, analytics is clearly a key area that's driving the effectiveness and the impact of delivery around fraud and risk. I'm going to turn attention now to more of the consumer delight aspect. I'm going to call out a couple of examples here where we started to really harvest the value of data that we've had for a while, to really merchandise that and make it valuable to the consumer. The first area I want to talk about is the process of onboarding a customer in the bill pay process. Now, what we have traditionally seen is this is a high friction point, and it's kind of a difficult and a resistance point to get consumers to adopt the service and to extend usage of the service. And what we've done is really harvest from the combined experiences of other consumers and use those data-driven insights to offer suggestions to new customers. So what you see on the screen here is an example of a solution component we call the Setup Assistant. And the Setup Assistant, what we've done is we've, through research, identified key categories that resonate with consumers, and then each individual consumer is offered a set of payees that is most relevant to them based on collaborative filtering with consumers that resemble their profile. And that has a whole number of things that influence what is presented to the consumer. But at the end of the day, we've made it very easy for the consumer to pick relevant relationships that they have and get started in the process. And the net effect of that is that we see considerable improvement in terms of lift and activation rates and adoption and usage rates of the bill pay solution overall. So it's a mechanism to use analytics to drive value in onboarding. The second area that I'll quickly talk about is a feature we call Smart Reminders. And this is, again, using analytics to drive relevance for the consumer. What we found is that consistently as consumers ponder bill pay, they have one kind of profound question they really would like us to help them with, or a value that they want us to help them with, and that is, help me not forget to pay a bill. And so what we've recently launched is a solution to do just that. And how this works is very simple. We look at, from a macro perspective, at broad payee and payment information. We also have looked at, from a micro perspective, the behavior of the consumer. And based on that, we will automatically remind the consumer when they're likely to have an upcoming payment that needs to be made. Right? This is serving exactly what they're asking for, the need that they're citing, and it's doing so in a mode that's not disruptive, and that they don't have to action and actively invoke. So we're really excited about this capability. It's another way to drive value proposition from the data to the end user. Now, the final area that I'm going to talk about today is really intelligent product cross-sell. And James talked about kind of the next best product offer. We've really taken a page out of that book and applied it into our digital payments products. So specifically, what we have built out, and we're launching as we speak today, is a capability that takes the payment stream data from the digital payment assets, and it pipes it into an analytics tool. And the analytics tool can then evaluate the payment stream and drive specific insights that can point to whether or not a consumer is likely to respond to specific product offers from the institution. And really, we focused on 4 product areas. We focused on credit card, we focused on home equity line, focused on auto loans, and then also installment loans. So those 4 areas, we're taking the data, and to give you an oversimplified example of what that insight would look like, let's take for an example a consumer who's paying a competitive bank credit card. Well, the fact that they're making a regular payment to that credit card provides some insight about its usage. B, the amount of payment and the path of the trends of that payment amount have certain insights. The frequency and timing of that payment have certain things that drive. That can influence the likelihood that somebody may be carrying a balance or not, the likelihood of what that balance is, and even in some cases what the interest rate. In some of these products, you can get inferences on what the interest rate will be. And all of that can drive insights into whether the bank can make an offer to a consumer that would resonate. Now, in addition to just the analytics, what we've done to make this really easy to deploy and really valuable quickly for the bank is surrounded it with some other capabilities and services. So as we put the data into our analytics database, we've actually integrated it with our Pinpoint marketing platform. So we have a campaign tool or campaign wizard that allows the bank to set up kind of an always-on campaign. I think it's important to, as we look at analytics, it's important to think about campaigns differently, right? It's not something that necessarily starts on June 1st and ends on July 15th. Instead, these are campaigns that, based on the criteria a consumer meets, and that's driven by their payment data, then they may move in and out of campaign target areas. So they may be a target for a credit card. They may fall off that target list for 2 months, and then based on their behavior, they may come back onto that list. So those insights are presented, and the rules can be set up very easily in this campaign wizard tool. Now, we coupled that with offers that are merchandised on behalf of the bank. The institution can pick from a library of offers. We are updating this with some degree of frequency, so there's always a capability to have fresh collateral in front of the consumer, so things don't get tired and get old. And then finally, we've incorporated real estate natively into the digital payment applications, so these offers can be merchandised to the customer. Now, the beautiful thing about this is we really go kind of from start to finish and make it really easy for the institution to harvest the value of bill pay and to be able to offer these services or these products to the consumer through a very easy to implement, easy to deploy solution set. Now, this is, like I said, we're just in the process of launching this, but the key thing is really a question about results. And so, let me share the results that we've seen from a pilot or a proof of concept that we did with a client bank. The client in this question was a regional bank, and really we focused this on just the credit card offer. So it wasn't expanded to include the other offer types, really just credit card. And the goal was to drive online applications and at the end of the day, new open credit cards. The target population was solely based on the insights from the bill pay stream, and the promotion was within the bank's digital channel applications, and they also used email as a mechanism. So results. What this institution saw, they actually set a new record for online card applications by using this mechanism. And when I say set a new record, they blew their previous experience completely away. They set their application numbers went up by more than an order of magnitude. So wildly successful in terms of driving folks to the opening page and driving relevance of the ads. For context, what that really represented was an open new card rate or open new card for more than 1% of those that were promoted to. And that's over a period of just 6 weeks. So they were super excited about the results of that. We were very excited about the results of that. That's really driven kind of the expansion of the solution and the ability to offer it in a very easy to consume mode for our client institutions. So really excited to see how the specifics work out as we deploy it more broadly, but initially we're very encouraged by the results that we've seen. Now, one of the things, we're really focused on payment analytics today, but I'm also want to speak a little bit about this platform because, as James talked about the opportunity space that we have in front of us, we've really built out these solutions in a way that they can be extensible. So the cross-sell capability I just walked through, it's easily deployed by a bank using the bill pay data stream. But in addition, it also has the ability to be extended through a number of different mechanisms. So, for example, you can import additional data sources, right? So debit information, core deposit information, all of those things that can be additional sources of data and drive additional insights into the consumer marketing challenge are supported by the platform. In In addition, we can also extend, obviously by adding new data sources, we extend the reach to customers beyond just payment customers. And then finally, the ability to promote the services can extend as well, not just into digital payment capabilities, but into digital channel capabilities for the bank, as well as into open internet services. So, for example, you see a screenshot here of the Weather Channel and serving up an intelligent ad in the Weather Channel that's relevant to your institution. That's what's the capability of this platform. And again, the bill pay piece is just a simple way to drive early relevance and value that can be extended into a more strategic implementation. And what we've seen when the banks are implementing this broader solution is a improvement in marketing ROI of 4 to 8 times, radically effective from the standpoint of deployment of the platform. We've seen cross-sell effectiveness go up by more than 60%. And where those banks have launched messaging through the open internet, we've seen those open internet ads influencing nearly 75% of consumer lending conversions. So really excited again about the effectiveness of this. And again, these insight-driven and relevant offers to the consumer end up being highly effective. Okay, so I'm going to wrap up and allow some time for questions. In concluding, really one key message, and that is you don't have to boil the ocean. Hopefully what you've seen in some of the examples I've shared with you today are a focus on driving real results. They're simple, they're quick to harvest, they're inexpensive, and they are valuable. But they're a stepping stone, right? They're a model where you can start someplace definitive, you can see demonstrable value, and then you can expand it into the vision of the more strategic harvesting of analytics insights. So that's what we're going to focus on today. And at this point, I'm going to turn it back over to Mike, and we'll take questions.
Excellent. Thank you, Chris. And we've got about 10 minutes as promised for Q&A. And so if anyone out there has a question that you're thinking, please put it in the queue, and we'll make every effort to get to it. Let's see here. I want to do the first question, and I'm just going to toss this out and see. Please, gentlemen, step in. Are there any legal or regulation flags, for example, invasion of privacy, that could restrict the use of payment data in building and executing credit risk scorecard models and/or rules?
Oops, sorry, I think I was on mute there. Good question. Building credit risk scorecard models or rules, the regulatory atmosphere and environment around this whole field is a bit of a minefield. Are there specific rules and regulations against that? Yes. What that actually regulates and what that actually prevents, I'm not positive on. I do know, though, that one of the things that's going on in this whole space as we start talking about big data and as we start talking about using that data for just about anything is, again, we've got this context where we've had a lot of breaches. We've had consumers and therefore the regulators concerned about the way data is being used. We've now begun to see a great deal of attention. So the CFPB, we've got basically just an alphabet soup of organizations that are beginning to take bits and pieces of this whole regulatory oversight of the way data is being used. But the other thing you have to remember is that regulation is always reactive. It's never proactive. And so even though there are some rules right now that would prevent companies from being able, or banks from being able to use these things, and again, what those are, that's probably better answered by a legal department. But one thing I would warn against is understand that because there are so many organizations, so many regulators who are beginning to look at this, and it is reactive, we haven't yet seen just what the regulatory climate is going to be. Know that there will be more restrictions, more regulations, more mandates on the horizon as we begin to roll this out. Because again, we're still early days on what's being done.
Yeah, James, I agree. I think I'll add to that. I think the other aspect, clearly we've got to focus on regulation and that aspect, but I think part of the result and part of what happens as regs evolve is going to be driven by how the respect with which we treat the data. And so, I think we spend a lot of time in terms of evaluating both through consumer research as well as just kind of does it pass the reasonableness test about are the services that we're offering, are the insights that we're providing, are they things that would be reasonably expected by the consumer that their institution would have? There's certainly the ability to, in some cases, do some things that can be perceived to be a little creepy. We're pretty adamant about staying away from some of those things. So I think that will, to some degree, derive the degree of how regs evolve around here.
Excellent. Thank you both. And here I've got a question for James. Are transformation projects about operational efficiencies and cost savings, or are there other advantages?
I think right now most banks, financial services institutions that are really looking at transforming the businesses are looking at it from that operational efficiency standpoint. They are looking at it from the perspective of, how do we save? And that's not a bad way to look at it. There are a lot of issues right now facing banks that have to do with they've got multiple platforms, they've got multiple vendors, they've got legacy, they've got all sorts of things sort of going on that might be holding them back. And so looking at it from an operational efficiency standpoint, which is about saving on price or saving on cost, saving on resources, is a good way to go into it. What they need to understand, where I think part of the issue as banks are beginning to look at doing this transformation, I think is part of the issue is it's still being looked at as a technology project and a technology initiative. And my hope is that by sort of pushing out the idea that, no, it's not just about that, you're now beginning to see a 360-degree view of your customer. You now have all of these channels that you can start using tools like Chris was talking about to start reaching out and delighting your customers, that kind of thing, is that you begin to find out or you begin to inform other organizations within the bank that, that it's not just a technology project, that this is about much more than that, and the advantages go beyond just saving money.
Great. Thank you. All right, next question. Let me throw this one Chris's way. How meaningful is the revenue from cross-sales based on pulling payment data out of bill pay?
Yeah, hey, thanks, Mike. That's actually a great question. The reality is we'll see once we get live deployments. Right, I shared the information from the regional bank experience that we'd seen. What I can tell you is based on our modeling, we look at the revenue stream, the value prop that comes from this cross-sell, and the effectiveness of that as potentially profoundly changing the whole economic structure of bill pay and digital payments. So we're really optimistic right now about what this represents, spread out over the course of month-to-month revenues based on the value of new products that can be originated through this channel. So stay tuned.
Excellent. Will do. Okay, let's see. Next question for James. Are many banks actually harnessing their analytics and data?
Not as many as could. It is still early days. There are some banks that are moving along. I thought that poll question actually was very interesting. I was curious to see if more banks said, or more people on the poll said that they were further along. And I was actually kind of heartened to see people say, hey, it's developing. That fits with where on the maturity curve most financial services, even large financial institutions, are, which is just now beginning to understand what they have and how they can use it. And then that goes back to even that earlier question about not only what they have, what they can do with it, but what they are permitted to do with it too. So we're still early on, and so again, the answer to that is fewer than should, but moving that direction and quickly. I think that a lot of institutions are beginning to realize that it is a competitive advantage, and using your data better and more productively is a differentiator.
Great. Thank you, James. And okay, looking through here, a lot of great questions. Thank you, everyone in the audience, for putting them in. Chris, why do you think placing an ad in bill pay would be different than a traditional digital ad?
Yeah, well, I think the answer is the relevance of the ad, right? So placing it in bill pay is not necessarily the big aha here, the secret sauce. I think what we've seen is really using that data from the payment stream and from the consumer's history to drive offers that make sense. That's the key thing here. It's not necessarily the placement. It's really having an ad that resonates and delivering it at a time that will be relevant to the consumer.
Wonderful, thank you. All right, next question. Identifying payments that are made to external competing institutions is very challenging. What kind of campaigns and messaging would you suggest when the exact nature of the payment is not known?
This is Chris. I'll field that one. So, I think it's an interesting question. So I guess we're optimistic that while it is challenging to understand the transactions that come in, if you think about the portfolio of digital payments and the information we have, we've been so far very, very pleased and very successful with identifying those transactions that are going to other organizations. So I think we're optimistic that it will be a little easier to identify than is stipulated here. But that having been said, I think as you ask about the types of campaigns and messaging, it maybe harkens back to the reference to kind of not being too big brotherish with respect to the way that we treat the data and the interactions. There are in many cases there are insights that we can harvest. So, for example, if we just kind of oversimplifying, right? But if somebody is paying a credit card an amount that ends in 00 several months in a row, then it's likely they're carrying a balance, right? So in that case, a balance transfer message would resonate as opposed to maybe a low fee structure. So I think we're looking at the data to derive insights about the types of offers, but really not overtly extending, as part of the messaging, extending the fact that somebody made a payment or the nature of their payments here, right? It's really about making an offer that resonates and just using the data to drive that more than, and not making that super overt for the consumer.
And this is James, just jumping in here on that. I think Chris is being a little bit modest when he's talking about what can be done with the data. This goes back to some of our recommendation on pick your partners wisely. If you're picking a partner and you're picking a company that actually deals with financial transactions, just that insight right there that Chris shared about a payment that ends in 0 means they're probably still carrying a balance. That's the kind of thing that is peculiar to payments, it's peculiar to financial services, and picking those partners that can actually help you because they've got the experience across financial services providers and they understand things like that will help with that messaging. And I think that that's where you get a lot of the insight, is working with those vendors and working with those companies that may have the experience and the understanding of the market itself. And because we are, again, at the very early stages, that will matter, because the trajectory of, as you do this better, you just get further and further ahead and more competitive, as opposed to maybe banks and financial institutions kind of wallowing around trying to figure things out at the very beginning.
Excellent. Thank you both for that. And that takes us just a little bit past the top of the hour, and we usually try to bring these in as close to schedule as possible, respecting everyone's busy days. So let me just thank both James and Chris for excellent discussion today and wonderful engagement with the audience. It's always a good sign when you get lots of questions from the audience. So thank you. I see that we did not get to everyone's questions. So as I mentioned at the top, we will be following up. So thank you for putting those questions in, and your voice will be heard. Please, everyone that's with us today, look for an email from us in the next 24 to 48 hours. We will be sending out something to you that will have a link to the recording and also to the slides themselves. So you can look at that in the future at your leisure, and we encourage you to do that. And with that, I will wrap things up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.